Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of November 4th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage here to give you an update. Well, last week we did see Delaware mortgage rates move slightly higher. If you look at the bond chart on the screen, you can see that mortgage bonds traded in a tight range, but then at the end of the week they finally broke below the 200-day moving average, which is a bad sign, and rates did tick higher. So because we broke below the 200-day moving average right there, we are going to recommend locking in your Delaware mortgage rate to start the week because the mortgage bonds could sell off. We got a big downside, and bonds could sell off and move rates higher in the short term. Long-term picture is rates should stay relatively low because of the bad numbers on the economy, but short term we could see rates tick up, so go ahead and lock in your rate to start the week. Now, if we dig into the reports this week, the big one that happened on Friday that basically caused the bond to sell off is the ISM Manufacturing Index for October 2013 was released, and it came out better than expected on Friday, came in at 56.4. And that's definitely good economic news, was not bond friendly, and that could, the reason why that's not great is because that could lead the Federal Reserve to tapering the bond buying program earlier than we think. Right now we think it's going to be probably March to June range, but with good news on the economy, could lead them to start tapering in the beginning of the year versus waiting to the middle. Then we saw the Federal Open Market Committee meeting, and they released their minutes on Wednesday. Two big points coming out of that. The Fed funds rate will remain 0.25% until unemployment is around 6.5%. So that's good news for banks because that's the money it costs them to borrow from the Federal Reserve. And then the QE3 asset purchase program will continue at $40 billion a month for bonds and $45 billion a month in treasuries. A total of $85 billion a month they're purchasing to help stimulate the economy. So that's going to continue on, and we're thinking at least till March, maybe even June, depending on the economy. Now, read on the economy. ADP payroll report came out for October 2013, showed only 130,000 private jobs created, well below the expectations of 150,000. And they also revised September numbers lower by 21,000 jobs, down from 160 to 145. You look at the chart on the screen, you can see that the ADP private payroll has been, jobs creation has been going down. It reversed the trend of going up. Now job creation is going down. Very bad sign for the economy. We cannot attest that to the government shutdown because we revised September's numbers lower by 21,000. Government shutdown didn't even happen until October 1st. So the jobs has been going down before the shutdown. The shutdown certainly did not help. Now, consumer confidence came out last week for October. That came in lower at 71.2, below the expectation 73.1. That was basically because of the government shutdown. Consumers are not happy, not feeling good about the economy, so that showed in the consumer confidence. We had reading on inflation, which was the producer price index, the PPI, that came out at, declining by 0.1%. And the core CPI remained the same at 0.1% as well. So that is very low inflation. That's going to help the Federal Reserve keep the bond buying program going. So that was bond-friendly news. Now, in the housing news, some great news in housing. The Case-Shiller 20-City Home Price Index for August 2013 rose 12.8% year over year. So another double-digit appreciation on home prices. And we were up 1.3% for prices from July to August. So housing is still going strong. We still have good appreciation. Now, this double-digit appreciation cannot continue, and we are looking at it to slow because of the rise in mortgage rates. And we can see that pending home sales report came out. It was down 5.6% for September 2013. So that is the number, pending homes is the number of homes, existing homes that got under contract for the month of September. So that was down. Now, the next event in the local news is the next free first-time homebuyer seminar. That is Saturday, November 16th, and that is in Newark, Delaware. That's from 10 a.m. to noon, and that's at the Christiana Hilton Hotel. You can register for that event by giving us a call in the office at 302-703-0727, or you can register online, www.delawarehomebuyersseminars.com. If you need help, you want to apply for a mortgage, you want to get a quick, free, fast pre-approval, you can apply online, premiermydelaware.com, or you can call us 302-703-0727. Look forward to seeing you guys next week.